enable.
UTI Mutual Fund and CNBC TV18 come together again this year for the 9th edition of the Financial Advisor Forums 2017-18 and hosted the first edition in Lucknow. This year's theme is Riding the New Mutual Fund Wave, Megatrends, Opportunities and Strategies. Industry experts shared insights on how to mobilize young Indians not only towards sensible investing, but also to generate and manage wealth through the ups and downs of financial markets. Welcome to the first chapter of the Financial Advisor Forum 2017-18, brought to you by UTI Mutual Fund and CNBC TV18. So let's kick off the evening with this special panel discussion. 2017, gentlemen, has been a landmark year of sorts. As far as financial reforms are concerned, at least, we've had the biggest financial reform since independence, and that's the implementation of the Goods and Services Tax. We've had the Bankruptcy Code come in. We've had the Real Estate Regulation Act come in. Amidst all of this, India has been seen by the world as a bright spot, a very bright spot in the emerging economy space. We've also recently had a Moody's upgrade and taking the outlook on India from positive to stable, and that's good news for the industry and for the markets as well. So, Mr. Puri, perhaps I'd like to open the session by asking you, for your views on the year gone by as far as mutual fund industry is concerned. The SIP accounts have been at a record high of 1.7 crores. So let's dwell a little bit on the year gone by and what can IFAs look forward to in the next year? Can I have you crystal gaze, for the trends, the mega trends that financial advisors should be looking forward to in the next financial year?
Mutual fund industry is essentially a mechanism for people to channel savings for long-term growth and wealth creation. It's not a casino. It's not a speculative arena. And ultimately, capital markets also follow cycles. Right. So it's precisely when you are in very good times that you need to start thinking about how you're going to manage through a cycle. So at this point in time, I would actually call out the fact that we are in a cyclical business. We are having an extremely good period, if you like, in terms of how we are managing ourselves. We must prepare for the fact that there will be a need to shift asset allocation as risk perception globally and in India changes. By the way, I think all of this will happen in the context of continued very strong flows into the mutual fund industry, which is not just about equity, which is the current phase that we've seen, but also about debt, fixed income, balanced, alternatives perhaps increasingly. So the issue here is not seeking linear growth and geometric returns. It's about an avenue that will give you balanced asset allocation through life's journey. And clearly the role of the financial advisor becomes much more important precisely at points at which you see these shifts in the cycle. So you're going to have tremendous flows. You're going to see a change potentially in the way the cycles move. And the role of the advisor is going to be central in their traditional ability to be trusted advisor and counselor through that process. Tremendously positive about how I see the future in that sense. Okay, great.
That's a very optimistic note to start out with. But Mr. Sondi, the mutual fund industry is, of course, maturing in India. IFAs are much more responsible with investor money now than ever before. According to AMFI, the industry is at an inflection point. So, over the next year or two, what do you think are the key growth drivers that are going to really up the game for financial advisors?
So I think adoption of technology is going to be, there's the usual suspect which is going to be there. And the more financial advisors adopt technology, they'll be able to reach out, more into whether it's a rural area or even within the city. Yeah. And now as young investors are coming in, they're more, easy to accept technology. It's the problem comes with investors who are over a certain age and they find it difficult to adopt technology. Right. So that is going to be one. Technology is one. And then as the regulations change towards making the advisory process more accountable, I think best practices will come in the industry and the client will get a fairer deal. And then the client will have greater faith in the instrument in the industry.
Yeah.
And that is going to have, he's going to get to a virtuous cycle. And so this, I think, is a very good time both for investors as well as for advisors.
All right. So we are here in the city of Lucknow, and you come from the city of Kanpur, Mr. Sinha. So give us a little bit of sense of the investor trends that you pick up from this region. What do people prefer? Are they into direct equities? Are they into mutual funds, SIPs? Particularly from tier 2 and tier 3 towns, are you seeing greater inflows? And how critical is the role of the financial advisor in increasing that inflow?
Yeah, talking about tier 2 and tier 3 cities, if you go by the Indian data, so almost 38% growth was there in B15 cities. But if you talk about UP in particular, then we have surpassed almost 58% of the AUM growth is from tier 2 and tier 3 cities. So we have beaten the all India standard by a huge margin. Yes, direct equity has its own importance among the large high net worth individuals and corporates. But as far as the individuals are concerned, they are more into approaching mutual fund for their equity investments.
Right.
And day by day, with the increase in penetration through technology and also through various social media products, we are approaching newer distributors and investors across the city and across the entire state.
Great.
We find that, yes, mutual fund is being accepted by almost everyone. It is no more a taboo anymore. And the government, the MFI ad about the mutual fund Sahi Hai has really made a dent and opening for new, more investor base for mutual fund industry.
Wonderful. One of the big challenges, Mr. Kohli, is always where to allocate how much and how much to diversify a portfolio. So given the volatility of the markets. So what are the trends that are shaping up asset allocation globally, and which of these trends are relevant to India as well?
So I would say next 10 years, we'll be inching closer to what China is today. And to make that happen, there will be a change in the pattern in which we are investing our savings. So India is a $2 trillion economy. 25% is our savings rate. So if we see the trends last 10 years, maybe 70-75% was going towards property. But I guess now this trend will reverse. It will be towards financial assets. Right. And we have already started seeing some data which is coming in. So while my friend Leo is sitting over here, UTI is the first mutual fund which came into this industry, 1964. Till 2014 March, before this new government came into picture, whole industry was at 9 lakh crore. It took just 3 years to double that what happened in the first 50 years. March 17, it became 18 lakh crores, and today we are somewhere closer to 21.5, 22 lakh crores. So I think we are in very, very interesting times. This asset allocation change is bound to happen. And for all of us in the advisor community, we are going to see the benefit of this by advising rightly to our clients.
All right. So largely the customer base that for anything in India today is youth. 65% of our population is under the age of 35 years. And today's youth is, of course, very upwardly mobile, very tech savvy, very well informed, well traveled. So in that sort of a scenario, what are some of the best practices that, Mr. Sinha, you think IFAs should be adopting to grow and expand their clientele?
Foremost thing is to be tech savvy. Unless and because most of the young generation, they go by technology only. They don't. They are not much interested into interface, one-to-one meeting. So all of us as a distributor community have to be tech savvy to approach the n number of new youth investors in the market right now. And another thing is that we have to keep on updating via social media what are the different avenues available and how they should start early in the beginning of their career, to either through SIP or through lump sum investment, so that they change the old system of, say, income less expense is equal to your investment or savings. Right now, they should think that we should educate them that income minus investment is your expenditure. Unless and until they go by this philosophy, it will be very difficult for them to retain and save sufficient amount for their future, because nowadays there is no pension available for the younger generation. Even their job is also not very certain. So the early investment psychology has to be imbibed among those youth. That is what I feel.
Right, right. And Sanjay, you've built a business across geographies purely by leveraging technology very well. So are there some best practices and lessons in excellence that you'd like to share with the audience here today?
Yeah, I think now that this market is so high and there could be corrections down the line, I think now for IFAs, the paperwork should be very good, because if there are challenges from investors who lose money, so I feel that a lot of effort has to go into having the right paperwork in place, the agreements with the investors in place. That has to be perfect. A lot of IFAs probably will need to spend time and energy on that. The other thing is to reach out to more investors. You'll have to not only use technology, but you'll have to have a mix of, let's say, because there's no option for not doing a face-to-face meeting. Right. So you'll have to have a mix of that. So I think these two things will see most IFAs through for some time to come.
Right. And Himanshu, you're involved with wealth management solutions, particularly for family businesses, for entrepreneurs. What are the unique challenges there, and how big is the opportunity for financial advisors? What sort of products is this segment looking for? And, can you share some of your experiences that helped you break that category?
So I would say we believe in a couple of things. One, having an absolute discipline in the approach of managing the wealth, have a very holistic picture, and select some of the most common ideas and just apply those to any family.
Mr. Puri, a lot of the focus in India is on short-term goals. We like to save for that next holiday, but a lot of us are not really planning retirement. And now, with the life cycle going up, with longevity going up, with cost of lifestyle going up, how can IFAs play a role in sort of educating people for better retirement planning, and what sort of strategies should they be adopting, especially in tier 2, tier 3 towns where people are not that well equipped or well informed to prepare for retirement?
In that context, the financialization, which I think as panel has been talking about, becomes very important. The financialization of savings, Himanshu referred to how different countries have been down that path. That is what we are seeing. We are essentially seeing middle class developing in India at a fairly rapid pace, and everyone has commented on how that's happening. And that middle class is essentially a savings-oriented segment of society, fundamentally. And as it saves, it's starting to save through financial assets. In that context, exposure to mutual funds, insurance, and so on are going to grow. I agree with Himanshu, of course, that mutual fund is a uniquely wonderful product because of its simplicity, its tax efficiency, its ease of entry and exit, and all of that. So you're going to see this big shift, and people's view, therefore, on retirement is going to be about long-term savings on the one hand, and mutual funds is certainly one of the best means for long-term savings. You're also seeing tax-advantaged pension products, such as new pension scheme. And I think many of the advisors here, by definition, must be advisors on issues around retirement. What products they position for their clients, the way in which they will use mutual funds, pension schemes, other financial products will depend on the profile of their clients.
Right.
But actually, our advisors have always thought about this. I think the range of products that they now have available and the context in which they need to think about retirement is different. So retirement and succession planning have always been issues in the Indian context, but today they are much more, I think, important and a formal part of the relationship between an advisor and their client, less an informal issue. You'll find succession planning, which means how do I pass wealth to the next generation, which is a theme as you get older, you start to think about. It's part of your retirement. And how do I support myself in retirement, where the social, family context is going to be very different from what perhaps my parents used to imagine.
Right. But today with changing demographics, the youth of today does want to achieve a lot more in terms of, maybe travel the world, maybe property is not right up there anymore, and maybe acquiring more material wealth has,
So if the youth of the world has always wanted that. There's nothing unusual about, at least
no,
I'm sure.
in India, the
You are
demographic
still
dividend
young,
is
but
high here.
I don't think this notion that the youth of today want something which the youth has always wanted instant gratification. The wonderful thing about youth is that one day they become middle-aged. When they become middle-aged, they start to think like middle-aged people, and they start thinking like you, and well, not you, but like we do here on this side of the table. And as they become older, they think differently. So there's nothing that different. And of course, if you want instant gratification, you seek wealth and so on, our industry can offer you a path to that.
Mr. Puri, while we are looking at riding that next wave of growth, how essential is rebalancing going to be given the current market scenario, and what are your top do's and don'ts for financial advisors?
Well, actually, rebalancing is a central and ongoing part of financial advisors' role and business. So at all points in the cycle, sometimes you're ready to take on more risk, sometimes you need to actually take on less risk, and of course all this has to be customized against an individual profile. It's not a one-size-fits-all. It's a highly tailored process, and good advisors know that. Your appetite for risk may be different from mine. So the essence of being a good advisor is obviously to start with an understanding of an individual or a family's perception of risk appetite, essentially mapped against their perceived needs, sometimes intergenerational needs, not even just needs for themselves. It could be needs for their family and others around them as well. And therefore to build a view on asset allocation. And I think what is good to see actually is that in this cycle, we've actually seen retail investors come in and participate, and from a low base, they have taken on a lot of risk in a sense. If you look at what has happened in terms of flows over the last 3 years, a lot of it has been into risk-seeking assets. I'm happy to say that investors have largely been rewarded thus far for their willingness to take that risk. And, that's important because we have seen them in other cycles where they came in too late and went out too early. Yeah. So for a change in this cycle, we have seen retail households come in early enough, stay the course, and they are still there. Now, none of us can predict when is the right time for a particular individual to take some risk off the table, look at fixed income. The important thing to note here is that even if you were to rebalance and let's say take more of a view that you want to take some equity risk off the table, fixed income in India has been giving you very healthy returns. Right. In a country with inflation of, let's say, roughly around 4%, you're still getting returns ranging from 7 to 9%, depending on the type of fixed income products you're looking at, with relatively low risk and with a certain amount of tax advantage over other forms of financial savings. So that's still a very healthy return.
All right. Okay, so we're running out of time. So as we close the session, I'm going to ask each one of you for that one tip to the financial advisor community that can help them ride the next wave of growth very, very effectively and efficiently. Would you like to start, Mr. Sinha?
Yeah, foremost thing is that you have to create your team of relationship managers so that they can really reach to n number of clients or prospects, and also update on technology platform so that more and more new customers can be approached. And unless and until you are equipped on these two fronts, it will be very difficult for us to increase and retain the client as well as increase our AUM in the industry.
All right. Sanjay?
I think the main thing which a distributor or an advisor brings to the client is trust. And if we keep on discharging our, relationship with the investor in a spirit of trust and that grows, I don't think there's a way in which the client wants to leave us, because like when we were starting out, I discovered that there's nothing called a credible intermediary. And if I would become something called a credible intermediary, looking at the client's bottom line rather than my own, then I would become an entity in which the client would never like to leave, because that thing did not exist or was not very, very hard to find. So we look at that process every day, and I think that's been the key for us for client retention. I think in our 14 years, I don't think we've lost a single client.
All right. Himanshu?
So one thing I would say, keep the concept very simple. One of the things which has helped us is serve what you eat yourself. So we have a model portfolio. If I have a profile and a scale of wealth similar to my client, my portfolio will be exactly similar to my client's portfolio. So it's not that you are consuming yourself something, but selling something to a client. So that is something which we believe. Where there's a highest conviction, you put your own money, you advise your clients to also invest the money in the similar fashion.
All right, so that brings us to the end of this particular discussion at the Financial Advisor Forum 2017-18 in Lucknow. Next time, of course, we'll be back with another episode, another city and another set of distinguished guests creating value for the financial advisor community. Thank you for joining us.